All right, so we're gonna go into a December 2023 market update for the city of Edmonton. We're gonna look at everything from the market as a whole, detached homes, townhouses, half duplexes, and even apartments. We're gonna look at how each of those segments is performing, as well as benchmark prices, so you can see how the prices have been adjusting over time. Let's jump right into it. Let's look at the market as a whole. So the market as a whole is gonna include all residential property types. It kind of mashes them all together. Single family homes, half duplexes, residential attached, townhouses, and apartments. We'll start with that and then we'll get into the more specific categories. So the market as a whole was sitting at an absorption rate of 30.72%. So it's basically right in the middle between a buyer's market and a balanced market. You could say it's a weak buyer's market or like slightly balanced with a little bit more of the weight on the buyer's side. That's stayed actually relatively steady for the last 4 or 5 months with like 1 or 2% swings. If you look at the last 13 months, in May it was at 34%, then 33% in June, 31.2 in July, and then we had another 32 in August, 30.6 in September, and 29.4 in October. So just kind of bouncing around. That says that the market as a whole is actually been relatively steady in terms of the balance between buyers and sellers. That's how many transactions are happening versus that inventory. Now, the average price for the market as a whole was sitting at $360,969. Take that number with a huge grain of salt. That is down from October. I'll show you the benchmark pricing later, which is a better indicator of actual changes in value. Now, the number of active listings was sitting at 3,877 at the end of the month, so that's the end of November, and there had been 1,191 sales. So the number of active listings is down 11.56% from October and down 18.14% from November of last year. Not surprising to see inventory dropping as we get closer to the holiday in the middle of the winter kind of thing. So that's pretty normal. Same story though, we do have less inventory than we did this time last year, which has been pretty consistent through all the market updates. If we look at the sales, they're down 7.82% from October. Again, not surprising to see a further dip in sales from a seasonality perspective, but it's up 34.58% from November of last year. So we're still seeing increased sales versus the reduced inventory compared to last year. So the market's been holding up pretty good, even though the interest rates have been elevated. Some of the fixed rates have started dropping soon. That's something I'll probably comment on further later on in the video. Now, the average days on market was sitting at 45 days versus 46 days last month and 53 days last November. Seeing it go from 53 days to 45 days in the course of a year, I would say that's basically because of the way the balance of the market has shifted. You have a little less listings and a few more sales, and lo and behold, it takes a little less time on average to sell a property. In terms of the market distribution, 19.4% of it under 200,000, 17.3% between 2 and 300,000, 24.3% between 3 and 400,000, and 18.5% between 4 and 500,000. Then you got 10.3 between 5 and 600,000 and 4.8 between 6 and 700,000, and then about 2.2% between 7 and 800,000, and just over 1% between 8 and 900,000. Then there's very little after that. So the biggest segment of the market as a whole is between that $300,000 and $400,000 price point. I've talked about that a lot in other videos, that's sort of competitive zone where you're seeing a lot of the sales. Even when we're taking into account all the apartments, townhouses, and everything, if you lump it all together, that's still the biggest segment of the market. You'll see it's an even bigger segment of the market when we look at detached homes. The next thing I wanted to show you for the market as a whole is the benchmark prices. So this is the composite benchmark price. So it's kind of, again, it's tracking the market as a whole. There is a specific description on what the benchmark property is. I won't pull that up right now. But I just wanted to kind of show you what's been happening over the past few years. So I've got this going from January 2020 to now, which is the data we have is still the end of November. So we got November 2023. Just kind of wanted to show you what's happened. Usually we do see the bottom of the market in terms of pricing on a seasonal basis. It's usually November, December, or January. So you can see the low of the market in 2020 was December 2020. Then the next low was November 2021. And then in 2023, the low was in January. Right now, we've got the data to November 2023, and you can see it is a current low for the year, unless you count January of earlier this year. So I wanted to point that out because there are still a lot of people on the sidelines that are buyers. If you're looking for a good deal, I usually say November, December, January is a good time to buy, because for the last several years, those have been one of the low months. So from December 2020, you can see that it started going up after that and peaked in like June or July. And then in 2021, it started going up in December slightly, but January is where you really started to see the increase. And then it peaked in April, May kind of thing in 2022. And then again this year, it peaked in June 2023. So if your goal is to get the best deal possible, probably buying in the spring is not the best time to buy if it's all about price for you. That might be the best time to sell if you're just selling, but if you're selling and buying, then you're taking both transactions at that time. So there's not exactly a perfectly ideal time based just solely on price if you're doing two transactions. So that's what's been going on with the benchmark prices. We're not sure yet if the low is going to be November or December or maybe January. If it does repeat from last year from a seasonality perspective, then we might see prices going up again in the spring. Let's look at detached homes now. The detached homes, they had an absorption rate of 29.96. So basically the same story as the market as a whole, right in between buyer's market and a balanced market. That's also been relatively steady for several months with just little upticks and downticks. Average price for detached homes was sitting at $467,148. At the end of the month, there was 2,083 active listings and 624 sales. So the active listings are down just over 16% from last month and down just over 33% from last year. So same thing with the market as a whole, where we've got reduced inventory compared to this time last year. And the sales were down 10.47% from October and up 27.09% from November of last year. So again, sort of same story. We got different percentages, but the general story is there's less inventory and more sales than there were this time last year. That might cause a bit of a squeeze as we get into the spring or potentially even earlier next year. If that sort of continues, if we see an increase in sales, but we don't see an increase in the number of listings, then we'll start to move further into a balanced market territory. Depending on how much it goes, it could actually move over on the seller side. I'm not really calling for that at this point, but we've certainly been surprised before in the Edmonton real estate market in recent history. So average days on market for detached homes was sitting at 45 days versus 41 days in October. So a little bit slower than a month ago, but it was 51 days in November. Now the market distribution, you can see there's 1.56% under 200,000, 9.24 between 2 and 300,000, 26.2 between 3 and 400,000, and the biggest segment is actually between 4 and 500,000 with 27.7. So but basically between 3 and 500,000, you're looking at, a little less than 60% of the market between 3 and 500,000. So those two combined is where most of the action is. Still a decent chunk between 5 and 600,000 with 17.39% of the market. And then you're starting to get under 10% between 6 and 700,000 with 8.46% of the market. From there, you can see it's 3.74% between 7 and 800,000 and just over 2% between 8 and 900,000. And just over 1% between 900,000 and $1 million. Now for benchmark prices, I'm going to split this into 1-story single family and 2-story single family. So the 1-story single family is basically going to include bungalows, bi-levels. Even though they've got basements, we only count them as like a 1-story, whereas a 2-story is going to be your typical 2-story home that also usually has a basement. So you can see that the trend between the two is pretty dang similar. There's going to be some slight differences, but overall they're performing the same. Obviously, the 2-story homes, the benchmark price right now in November 2023 is sitting at $483,400, whereas for 1-story homes, the benchmark price is sitting at $370,300. Same general trend as I showed in the market as a whole. Often the lowest price of the year is going to be in November, December, or January. So if you're looking for a good price, you might want to do it before the spring hits, unless you've got a magic ball and think something's going to be different this year. So let's move on to the next section. All right, now we're going to look at the semi-detached market. So that's mostly going to include half duplexes and what we call residential attached. Half duplex, you're just attached to one neighbor. Residential attached, they often look like townhouses where you've got 3 or more that are attached to each other. You could be an interior unit or an exterior unit where you're only attached to one. If you're an interior, you're attached on both sides, and if you're an exterior, you're just attached to one. So that feels a lot like a half duplex, but because it's attached to more than one, it is residential attached. So there's the technical description of what those are. This market is sitting square in the middle of a balanced market with 39.26% 43% absorption rate. There's a lot less numbers in this market, so it's not surprising. You can see that's ticked up a little bit from October, but pretty similar to September. A couple bounces along the way. I don't have the data from going further back, so we just got recent data on this since they changed the stats. Average price was sitting at $361,040. There was 298 active listings at the end of November, and there had been 117 sales. Month over month, there's just over 15% less active listings and 10.69% less sales. Don't have accurate year-over-year numbers for that, but the average days on market was sitting at 39 versus 44 days last month. You can see the biggest segment of that market is between 300,000 and 400,000, which is 43.17% of the market, with the next biggest segment being between 400,000 and 500,000 with 25.73% of the market. Jumping back over, between 200,000 and 300,000 is just under 20% of the market. So between those, basically between 200,000 to 500,000 is where like the vast majority of those sales are happening for semi-detached. I don't have benchmark prices for this, so we'll move on to the next section. Let's look at townhouses. So the townhouses are sitting at an absorption rate of 45.64% of the market. So it's actually balanced, but leaning a little bit more over to the seller side. A lot of this has to do with inventory. That's pretty steady, up a little bit from last month, but you can see that this market's definitely performing a little bit differently than the rest of it. Average price for townhouses was sitting at $270,604. There was 436 active listings at the end of the month, and there had been 199 sales. So you can see it's not a huge chunk of the market. Active listings are also down for townhouses. They're down 13.83% from last month, but that's a regular seasonal change. Don't have the data from last year. And for sales, they're down 8.72% from last month. Same similar sort of trend in terms of inventory and sales. Average days on market was sitting at 42, which is the same as last month. And you can see the market distribution here is almost exclusively under 400,000, with 33% under 200,000, 35% between 200,000 and 300,000, and 27.8% between 300,000 and 400,000. Then you got, 3.17 between 400,000 and 500,000. Those are the luxury townhouses. All right, so let's jump over and look at the home price index pricing for townhouses. Again, this is probably the best thing to track if you're wanting to see overall changes in value versus average prices, which can be skewed a lot. So benchmark prices for townhouses in 2023 was sitting at $233,900. You can see that the last low was in February 2023, which is a little bit surprising, a little bit different than what I was telling you with the other market segments. It doesn't really change the fact that the lower prices are between November to February in the case of townhouses. You can see that we had a high in June 2022 when it was sitting at 248,000, and the last low before that was in December 2021. Similar trend, but it looks a little bit different, a little bit more jaggedy compared to the other market segments. You can see that we've had some ups and downs recently, and that could be more so because of the inventory. There's not quite as much inventory, so you're seeing it kind of bounce around a lot. Not significantly, you're not seeing huge swings in prices. Like if you look at this from the low in February till now, 212 to 233, it's not a huge swing in price in terms of actual dollars. And if you look back at December 2021, that's only about $10,000 off from the price now. So you're not seeing like huge, big number changes there, at least in the last few years. So that's it for the benchmark prices for townhouses. All right, apartments. So the apartments are a much different market than what we've been seeing with the rest of them so far, as you'll see. So the absorption rate was sitting at 23.7%. So you can see that's further into a buyer's market than all the other market segments. And it's been like that for a long time. Bounced up and down a little bit, but it's been a buyer's market for a long time for apartments. Average price was sitting at $168,614. There was 1,059 active listings and 251 sales. So you can see there's a lot more inventory for apartments than there is for semi-detached and townhouses, but there's also not that many sales given how much more inventory there is. Active listings are down 16.28% from October and down 42.94% from November. I'm not 100% confident that last year number is correct, so let's just focus on month to month. Sales are down 1.18% from October, so it's actually the smallest drop in terms of sales volume for this market segment, but it's still a buyer's market anyway. Average days on market was sitting at 54 days versus 63 days last month, and you can see the vast majority of sales are under 200,000 with 67.91% of the market sitting there. and 23.79% of the market between 2 and 300,000, and 5.8% between 3 and 400,000. After that, it's pretty flat. Now, for home price index, this chart looks a little bit different than most of the other ones have, or all of the other ones have. You can see in November 2023 that the benchmark price was sitting at $173,600. Back in January, it had a low of $164,000. There was a peak in June 2022 of $182,500, with the previous low being in January 2022 at $171,900. Going all the way back to January 2020, you can see that that price is actually higher than all the other prices I've just discussed with you at $185,400. So the difference between the other market segments and apartments is, even though there's still lots of ups and downs, you can see that the apartments are still on a slow trend down over time, even though there's ups and downs, whereas the other market segments are on a slow trend up over time, even though there's ups and downs. Either way, all the markets have been relatively flat, especially if you compare them to Vancouver or Toronto. But that's the big difference between apartments and the other market segments, is that they have been trending down over time, whereas the others have been trending up. So that's it for the apartments. If you're looking at any of these market segments, it would be great if you could reach out to me at 780-819-5508, or you can book a free strategy call at booktrevornow.com. Totally free. You can ask me anything you want. I'll help you for up to half an hour. My only hope is that if we hit it off and you do end up entering the market at some point in the next year or two, that you choose to work with me. So go to booktrevornow.com and you can select the time on my calendar. I hope this video has been valuable to you guys. You can like and subscribe if you want to keep in the know. If you click over here, you can subscribe, and if you click over here, you can watch another video. All right, thanks so much for watching.